Hi, welcome to the Market View for Monday, the 8th of September 2014. And the gap you see in the chart this morning is genuine. The British pound has gapped lower by some 50, well actually it's by 100 pips. We've got 50 to here and then another 50, so over 100 pips lower this morning, the gap. So let's just get a more precise figure to the low of this bar. Is a 155 point drop on the pound this morning for whatever reason. I've not looked at the news yet, but obviously there's something that's moved the markets of a geopolitical nature, I would suspect, as this is unusual to see this. On Friday we had one signal in a very narrow ranged market again. The market waiting for the non-payroll figures, which were released at 1:30. Here we see the reaction to this, with prices moving higher and then fizzling out in the same area where we had a 15-point loss earlier on in the morning. The market pulling back to the support at 163, and then we see the market just again finding resistance in this area here down at sort of the 163.30 area. The 60-minute chart, nothing on this at all. It's just a sideways range, which we can see there. And in the daily chart, of course, it looks horrible now because we've got this gap for today. So we're looking around the December lows now for the British pound. If I just move the chart over a bit, so we're at sort of December area, January, December lows. Just pop on a couple of lines for you, just so that we can see where we are. Which probably around about here is the next downside target. So we're looking at 159.48, which is amazing really, considering we were up at 170 not so long ago, and you can see this sort of drop off the cliff type of thing, which is what you get with a market that fizzles out. And this of course is what we're looking for with the Dow at some point. In the news today we've got nothing. Halifax HPI is out later on. That's showing a drop in house prices, and then Lou is going to speak at 1:45. So no major economic news items this morning, no high impact ones at all for today. In the Dow we've got the market reacting to the non-farm payroll figures. Pre-market prices went down, and then the market opened, or rather the market went up with the non-farm payroll figures, came back down just after the open, and then just traded higher for the rest of the session there. So you can see prices heading back to the all-time high of 17,161. In the implied volatility, this also dropped on Friday from 10% down to 9.22, and again reflected in the chart there. So it's quite a drop for Friday in the implied volatility. So it'll be interesting to see what this market's going to be getting up to in the next few weeks, because that's quite a turnaround in just one day there. Right, well that's it for this morning. There's not a lot else I can report on. That's just about it. Let's hope things start to cheer up a bit, and I'll have a look around, see what moved the market on the overnight to get the pound to drop 155 points on the open. So obviously something of like I said before, a geopolitical nature there. Right, I will see you in tomorrow's Market View. As ever, thank you for your support and also for watching.